The local index is flat with the local currency also losing steam in early trade. The JSE tracked weaker global markets on Tuesday, while the rand weakened along with its emerging market peers after US inflation came in higher than expected. Sithembile Bopela, FNB Wealth And Investments analyst, joins us now. Sithembile, very good morning. Give us an overview of how general markets are faring so far today.
Very good morning. Yeah, there seems to be, there's love in the air today, but there's generally a lot more caution in the market, unfortunately. The local bourses started off on a negative note. We did see yesterday the market start off on a front foot, but then at the end of the day, gave back a lot of those initial gains following, the sentiments in other international markets after locally we had, disappointing mining data, which showed, December's mining output rise marginally by 0.6% year on year compared to what market analysts were looking for about 4.9% increase on the other hand. So there were domestic challenges cited as detractive to that performance, power struggles, rail and port problems that we are very much aware of by this point. Those had a significant impact on that number. But I think generally, markets were reassessing the US Fed's interest rate hiking, or rather interest rates trajectory following the US CPI data that came in, hotter than what the market had anticipated. We did see, US indices come under pressure following that print. We did see bond markets, commodities also come under pressure quite significantly. And that was because, January CPI came in at 3.1% compared to analysts' consensus expectations, rather, that were looking for about 2.9%. And so the main sort of driver of that was around the shelter category, which has kept, both the headline and the core inflation number quite sticky so far. And so we did see the market kind of shift the rate cut expectations. Initially, the market was anticipating earlier cuts as soon as March and even May. But it seems that the market is now closer to the Fed's expectation, which is July, which, after quite an optimistic start to the year, has triggered quite the significant sell-off across, as I mentioned, the equity markets and bond markets as well.
Sithembile, Stats SA is due to publish December's retail sales. What do you expect to see from that data?
So, the festive season numbers that we saw from the local retailers came in quite robust, showing, some positive volume growth, sales as well, driven by robust spending, which I think should be positive for, the upcoming numbers. But we do expect, that, subdued consumer demand is likely to persist in the near term, which is weighed by, as we've seen, sticky inflation, the high interest rates environment, as well as depressed consumer confidence in general. But that being said, the medium to longer term outlook is slightly brighter. Consumers should benefit from, slowing inflation trends, positive employment gains, and the extension of the social relief of distress grants, which, should likely support those retail numbers.
Well, talk us through DRD Gold's interim results for the 6 months ended at 31 December 2023.
So it's not a stock that I look at in any detail, but I did see the numbers, just from initial impression, it did seem quite positive. It seems that while production and volumes were quite subdued, what did support the numbers was they did see higher pricing, which was supportive on the profitability, but also on margins. They did see some efficiency gains as well, supporting the bottom line.
Now, finally, Santam has a trading statement out. Did anything stick out there for you?
Yeah, so it was quite a solid update from them. I think the stronger investment income was quite a highlight for them, and that was supported by they did mention a weaker rand, but also there was strength in the group's money market and fixed income portfolios, which was underpinned by the high interest rates environment, which I think ultimately helped offset on the downside. They did see weaker underwriting results, and that wasn't quite a surprise with the margin coming under pressure. They did face quite a tough claims experience. They've seen adverse weather conditions, exposure to the Turkey earthquakes, fire-related large fire claims as well that were detractive from that perspective. But those have been, I think, well communicated and so expected in general.
Sithembile Bopela watching the markets first. Appreciate your time this morning.